So what we're seeing take place is the process of debanking, a phrase that I think Jim said he didn't like this morning, but it's a phrase a lot of people use. As places like this take on more of that business, at what point does a place like this pose the same risk as a bank and needs to be regulated as such? How close are we to that moment?
I don't think we're very close at all. First of all, I don't think we're experiencing, quote, debanking. Banks are and will remain at the center of our financial system. Okay, there's no doubt about it. They have the customers. They provide, the vast majority of the credit. But what do places like this do? At the margins, they provide a great deal of credit. And that additional credit source that places like Apollo and others have provided, I think, has been a great stabilizing effect on the economy as we've gone through this transition. When you have more nimble credit, you have a better functioning economy.
So how many calls do you get from regulators, current regulators, that are saying, just want to check in, you still feel that way? Everything okay, copacetic?
Yes. And look, coming out of Dodd-Frank, let's just say we have a credit-based global economy. There is no doubt about it. Global credit, let's just call it 100, okay? We said coming out of Dodd-Frank globally, we're going to take the portion of that that's banking, let's just say it was 70. We're going to shrink it. Okay. Where's that credit going to come from? If you shrink that 70 to 60, you got to get 10 from somewhere else. And I think people have stepped in. And we should recognize that's what happened.
Well, and a lot of people would say that, especially with March and what happened there, a lot of private investment firms did step in, and they took on portfolios of loans, and they helped some of those banks avoid defaulting. The question is just, we haven't been through another cycle where private credit has taken on this much of the banking sector. And so there's a question, are there stress tests? Are there things that you see sort of developing to avoid bad actors that some people say could be out there?
There's plenty of stress testing going on here, and it's the kind of question that we ask all the time. And if you look at the portfolio, the Athene portfolio, it's transparent. People can see it and the like, which is pretty. But to Jonathan's question about banking, it's not banking. We're not engaged in liquidity transformation. We're not borrowing short and lending long. We have a matched duration. And that's very important. And look, regulators should ask that. They should say what is going on in this ecosystem, but it's not highly levered, and it's not liquidity transformation.